Hello again, everyone. It's Vince Moore from TradeWinds.com, and this is our update for August 1st, 2016. Let's take a quick look at today's markets. Another mixed session. This time the Dow was down 28 points, still in the midst of that pullback, but we are right back at that 20-period moving average. We have actually closed this gap now, which is a good thing, and are putting in very, very low range candles. So, you know, we might be due for a bounce any day now. The S&P 500 was down about 3 points, while the NASDAQ finally caught up with all the others and has put in fresh new highs here today at 47.50. It finished the day up about 22 points or so, and you know, it has just been a straight ride up. Now, what will be interesting to see now is, now that it is at new highs, you know, and again continues to put in small range candles, should we expect a pullback? You know, we heard today, or at least I read an article today about Goldman Sachs coming out and saying that people should avoid stocks for the next 3 months. You know, looking at the charts here, as we said in yesterday's video, you know, things actually look pretty bullish right now. So, you know, could we expect a pullback here in the NASDAQ? Absolutely. We're way overdue for one. Will it be a dramatic drop? At this point, it looks like it's just going to be another pullback before a continuation of that move higher. The Russell is still catching up here and still has room to go. But no matter which index chart you look at, one thing you can't deny is how strong the momentum is right now. And look at that slope on that 20-period moving average. So whenever you have that, you know, the likelihood is that the up move will continue. If and when that moving average starts to flatten out and even roll over, then we can question it. Until then, the bias is to the upside. We'll let the charts lead the way. Now, looking at a few others, TLT today pulled back, was down about 2 points. Gold continued higher here, albeit slightly, and crude was down again, fairly dramatically here. Now, I've heard a lot lately, or I've received the question, how do I trade crude if I don't want to trade the futures contract? Well, a simple way is go to the ETF, which is USO. Now, it's under $10 here. So personally, I don't like shorting anything that inexpensive, but certainly you can. But you know, one of the things I would obviously caution is the fact that this is still a falling knife situation, and I would absolutely personally wait for a pullback and then a reversal signal before jumping on board short with oil. Do I think it's going lower? Absolutely. I think we can actually retest the lows, but I would certainly wait for a pullback. But another way that you can get into the oil market is if you go by industry group, go to the energy sector, and you know, pick a section like energy equipment and services, oil and gas, drilling. And if you look down the line here, I'm just going to sort these by last price here and look at some of the more expensive ones here. And there aren't many these days, and that's the real issue here. There aren't many, but certainly you can see that they're all more or less rolling over in a very big way. So when you get a pullback here, you can trade the options on any of these issues. They pretty much follow the futures contract pretty closely. So across the board, it all looks like the same pattern. So, you know, trading options on an individual stock or the ETF is another way to get involved with oil, even if you don't prefer to trade the futures contract. Okay, so a lot more to come this week. We still have some earnings on board later this week, and of course a slew of other news announcements. But we'll keep an eye on the indexes here and see if we can get some type of bounce here in the Dow, you know, or whether or not we're just going to see a continuation of that move higher like we have recently in the NASDAQ. Okay, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.